Hello everyone. Welcome to the Blockchain News Club. Let's take a brief intro into today's crypto updates before going into the details. The Australian government is acting to ensure the regulation of crypto assets protects consumers and positions our economy to take advantage of new digital products and services. Berkshire Hathaway Vice Chairman Charlie Munger urged the U.S. government to ban cryptocurrencies, as China has done. Munger and his business partner Warren Buffett are longtime cryptocurrency skeptics, contending they are not tangible or productive assets. Ripple General Counsel Stuart Alderoty has taken a jab at the U.S. Securities and Exchange Commission, likening its case against Ripple to the Chinese spy balloon shot down by the U.S. military over the weekend. Self-proclaimed Bitcoin inventor Craig Wright and Ripple CTO David Schwartz got into a heated Twitter debate. The cause of the altercation was a tweet by Wright in which he claimed that XRP is a complete scam. Ripple and its team remain confident that they will prevail in court. Garlinghouse has mentioned he expects a decision in few weeks. $1 trillion is the value tokenization XRP is expected to hit in 2024. That value is expected to surge to $10 trillion by 2028. Before we dive deep into today's updates, please subscribe to our Blockchain News Club channel. It will help us immensely. Australian government working to ensure crypto regulation. The Alban government is taking action to make sure that the regulation of cryptocurrency assets safeguards consumers and prepares our economy to capitalize on cutting-edge digital goods and services. Some businesses that deal in crypto assets have exposed consumers to unsustainable business practices. In order to ensure that consumers are properly protected and that genuine innovation may flourish, we are moving quickly and systematically. Following Australian shares, crypto was determined to be the second most popular product type held in a recent ASIC poll. According to the survey, only 20% of cryptocurrency owners considered their investment approach to be risk-taking, raising concerns that investors did not understand the risks of this asset class, said ASIC Chair Joe Longo. Mainstream adoption makes a case for regulation to protect unwary people. Numerous high-profile breaches, frauds, and failures have occurred, including the recent demise of FTX, the second largest cryptocurrency exchange in the world, which left many users out of pocket and undermined market confidence. Administrators Cordamentha are examining the books of the Australian registered corporations in Australia, where it is estimated that 30,000 people are out of money. The value of cryptocurrencies can and often does fluctuate rapidly based on nothing more than a tweet, and investors have limited safeguards if businesses fail or have security flaws. Cryptocurrency has also brought it novel and perplexing tax issues. While immediate steps are being made to safeguard consumers, more research is necessary to fully comprehend the opportunities and hazards that cryptocurrency poses in the long run. Treasury's token mapping exercise is where it all starts. In-depth analysis of which components of the crypto ecosystem are adequately regulated and which need more attention is done in a consultation paper published today. This will make it possible for the government and other interested parties to concentrate on regulatory loopholes and make sure that new risks are recognized and managed. The Australian government is devoted to methodically collaborating with regulators, business, and consumer advocacy organizations to create the best possible policy frameworks to safeguard consumers and encourage innovation in this developing market. Charlie Munger says the U.S. should follow in China's footsteps and ban cryptocurrencies. Charlie Munger, vice chairman of Berkshire Hathaway, urged the United States government to outlaw cryptocurrencies, as China has done. He claimed that a lack of regulation allowed for disgusting excess and a gambling mindset. A cryptocurrency is not a currency, not a commodity, and not a security, the 99-year-old Munger said in an op-ed published in the Wall Street Journal Thursday. Instead, it's a gambling contract with a nearly 100% edge for the house, entered into in a country where gambling contracts are traditionally regulated only by states that compete in laxity, Munger said. Obviously, the U.S. should now enact a new federal law that prevents this from happening. Longtime opponents of cryptocurrencies, Munger and his business colleague Warren Buffett maintain that cryptocurrencies are neither real assets nor productive ones. Munger's most recent remarks come at a time when the cryptocurrency sector was struggling with issues including failed projects and a lack of liquidity, which were made worse by the collapse of FTX, once one of the biggest exchanges in the world. Over $2 trillion was lost from the Bitcoin market's value in 2017. According to Coinmetrics, the price of Bitcoin, the biggest cryptocurrency in the world, fell 65% in 2022 before rising nearly 40% to trade at about $23,824. The prominent investor claimed that thousands of new cryptocurrencies were recently released by privately held corporations and listed on exchanges without prior authorization from the government. Some have been given away to promoters for practically nothing, Munger claimed, and then the general public invests at much higher prices without fully realizing the pre-dilution in favor of the promoter. He mentioned two interesting examples that might help the United States take wise decisions. First, trading, order matching, token issuance, and derivatives for virtual currencies are expressly forbidden in China. Second, Munger noted that the English Parliament outlawed any public trading in newly issued common stocks beginning in the early 1700s and maintained this outlaw for almost 100 years. What should the United States do now that a cryptocurrency prohibition is in effect? Another course of action would be to express gratitude to the Chinese Communist leader for his excellent display of extrasensory perception, Munger suggested. Ripple General Counsel trolls SEC case, compares it to spy balloon shot down by U.S. military. Stuart Alderoty, the General Counsel for Ripple, has poked fun at the U.S. Securities and Exchange Commission by comparing its investigation of Ripple to the weekend Chinese spy balloon that the U.S. military blew down. The attorney tweeted this yesterday. One commenter pointed out that Alderoty's tweet had a number of ramifications. He might be implying that Ripple's response has disproved the SEC's allegations, that they are baseless, or that they are in the clear. Just released photo of SEC's misguided case following 2 years of Ripple's relentless defense, wrote the attorney captioning a photo of the deflated balloon descending from the sky. The XRP community has reacted furiously to Alderoty's tweet, including seasoned lawyer James K. Filan, who has consistently supplied updates on the matter. Nails it, commented Filan, paraphrasing the tweet from the General Counsel of Ripple. It's important to note that Alderoty has criticized the regulator before. The SEC was referred to as the bouncing regulator by the Ripple attorney in December due to its ongoing position shifting in its lawsuit against Ripple. In the more than 2-year-long legal dispute, all documents have been filed and discussed as of Alderoty's most recent remarks. Judge Annalisa Torres will now rule on the case. The lawyer claimed that he anticipates a decision in favor of the blockchain payment startup in the first half of 2023 as part of Ripple's 2023 forecasts. Supporters of Ripple and XRP have hailed the case, once referred to in a Forbes piece as the cryptocurrency trial of the century, as an assault on the whole U.S. crypto industry, not just Ripple. Alderoty thinks the outcome will have a big impact on how cryptocurrency is used in the U.S. in the future, as was reported last month. Notably, John E. Deaton, a friend of the court in the lawsuit who represents thousands of XRP investors, has voiced similar sentiments. Deaton predicts that for the next 2 years, the ruling will be the primary source of clarity for the sector in the U.S. As the lawsuit draws to a close, a number of industry experts have come out in support of Ripple because they are concerned about the potential backlash the SEC may unleash on the growing market. However, they think that if Ripple wins, the regulator would be forced to abandon its current enforcement-only regulatory strategy and come up with fresh, transparent market regulations. Ripple CTO David Schwartz slammed the self-proclaimed Bitcoin inventor Craig Wright for calling XRP a scam. Craig Wright, who claims to be the creator of Bitcoin, and David Schwartz, CTO of Ripple, got into a contentious Twitter argument. Wright's tweet that XRP is a blatant hoax was the catalyst for the altercation. David Schwartz, as usual, responded sarcastically to the ridiculous assertion. Ripple CTO not falling for Craig Wright's tricks. If you ever mention Ripple CTO, call him as he is, tweeted Craig Wright, the controversial businessman and chief scientist of N-Chain. Fraudster Davey. He made a comparison between David Schwartz and Bernard Madoff, including the shitcoins. As Wright said, remember the truth if you believe this to be libel. Davey is a swindler. He continued by adding that XRP is a blatant hoax. When Schwartz heard that statement, he was offended and retaliated, saying, "It's hilarious how you feel the need to attack me when, and only when, you are being condemned for your own unjustifiable acts." Earlier, CoinGape reported that Craig Wright had been criticized by the Ripple CTO for sparking a pointless debate on the XRP system. It is always clear that the man who calls himself the founder of Bitcoin has something to say about XRP or David Schwartz, although acting as though it should be the other way around. Ripple says SEC lawsuit could end in weeks, don't hold your breath. The current security status of XRP as those tokens exist today could be decided by a judge, but the majority of the complaint particularly focuses on Ripple's initial coin offering. In other words, whether or if the company's prior actions, promises, and sales constitute a security today is a separate legal question. In the worst-case scenario for the defendants, a judge might compel Ripple to pay treble damages, disgorgement, fines, and interest totaling several $billion. Such a sum would render it, co-founder and CEO Brad Garlinghouse, and/or executive Chris Larsen permanently bankrupt. The Ripple team is still convinced that they will win the case. Final arguments were provided and a judge's decision on summary judgment was requested jointly by the SEC and Ripple as recently as December 5. This would put a stop to the litigation and prevent a trial in court. Some people thought that a resolution was imminent after this show of collaboration, but District Judge Annalisa Torres has yet to schedule a new hearing. Garlinghouse has stated that he anticipates a decision to be made in the first half of 2023. The SEC and Ripple are still exchanging court documents while this is going on. James Filan, a lawyer for Ripple, claims that the SEC recently submitted a move to prevent the expert witnesses for Ripple from testifying. Stuart Alderoty, the general counsel for Ripple, has controversially urged Congress to strengthen its oversight of the SEC, which he believes prioritizes power above sound policy. Alderoty asserted that the SEC lacks both the power to enact new laws and the scope of its powers. Ripple XRP price to go 10x after win over SEC in this future tech billion-dollar market of tokenization. The usage of tokenization by Ripple will be extremely advantageous to both its network and local token. Due to its capacity to track asset ownership utilizing blockchain technology, tokenization will be in demand. The value tokenization is anticipated to reach $1 trillion in 2024. By 2028, that amount is anticipated to increase to $10 trillion. There are still several obstacles in the way of tokenization. Although adoption is sluggish, interest among major financial top dogs is rising. The first blockchain to enable tokenization for a wide range of assets was Ripple's XRP Langer. Stablecoins, NFT tokens, and other digital currencies like Bitcoin and Ethereum are examples of these assets. Thanks to XRPL, the USD, EUR, gold, and even equities can be tokenized. On the blockchain network, XRPL is observing several significant developments, despite the slower overall speed. On-chain activity on the XRPL platform was reported to be brisk in a report recently released by Ripple. This year, the platform's volume of transactions has greatly increased. A staggering 3 million to 106 million transactions are currently kept in the ledger. The growth rates for NFT transactions are likewise increasing at the similar rates. The ledger recorded 228,000 new wallet uses in the most recent quarter. Additionally, Ripple disclosed that since the SEC litigation started, Ripple had already spent $8.4 billion on purchases. If XRPL is successful in the crypto market, it will undoubtedly hold the key to a significant price increase for XRP. Thank you for watching. Please subscribe to our channel for regular updates in the blockchain community.